Hi again, everybody. Dr. Sam here. Today we're going to talk about bank reconciliation. Many of my students have asked me to do a video on this topic, and here we are. So let's go ahead and do that. Let me upload my screen here. Hopefully you can see it without much trouble. Okay. So we're going to do a bank reconciliation, and the objective of doing one of these bank recs is to make sure that your checking account matches up with what the bank says you have. Okay. So, typically you'll see the company name in the heading along with the type of document you're doing. Alrighty. And we'll just say it's August 3rd, 20XX. Right? So the objective is to try and get our books, the checking account, to match up with what the bank says. So over here at the left, I've got some data. And the bank just sent us a statement. And the statement indicates that whenever they, computed all their information, that they came up with 1748.09. So we're going to start the bank rec with the bank info. So we'll start with bank statement balance, and we will enter that number 1748.09. Okay, let me just make sure this is in accounting format. We'll keep the cents. All right. So as we're doing this, you realize that the bank says we've got 1748.09. And then you look at your checking account, you look at your book balance, or you look at your app, and you open it up and you're like, wow, I've got 2293 in there. What is the bank thinking about? How can they be this far off? Well, keep in mind, when the bank sends out that statement, or when they prepare the statement, it could be a week ago. By the time you get the information, you may have had a lot of activity in your checking account. You may have used your ATM multiple times. You may have made some deposits since the last time that bank statement was prepared. So we're trying to figure out, what this number is. And if our number is different, can we get them to match up with what has transpired since that bank statement was prepared? So some things that could happen. Let's say you made a deposit yesterday, okay? There's no way that deposit's going to show up on that bank statement that was prepared a week ago. So in this bank statement section, you're going to do what we call what if analysis. What if the bank knew about the deposit? So if the bank knew about the deposit, they would do the same thing we did. We would add it to our account. So a deposit in transit is a deposit that you have made but has not shown up on the bank statement yet. So in this case, we only have one deposit in transit, and that's 637.02. If I had multiple deposits in transit, I would utilize column 1 for subtotaling, and I would put the total in grand 2. But since we only have the one, I'm going to move that all the way to column 2, and then let me update the subtotal. 1748 plus 637.02, and we're looking at 2385.11 so far. So then, what if we wrote some checks? And I looked at the statement that I got in the mail, whether I opened it up in an email or I physically got the statement in the mail, and I look and say, hey, what about those checks I wrote? Well, I could have written you a check and you could have left it on your dresser for the last 2 months, right? So you want to keep track of these checks so you don't end up bouncing your checks when you write a check. So you got to always stay, aware of what checks have been cleared and which ones have not. So if you wrote a check, you automatically deducted it from your account, just like you using an ATM, or you using your ATM card, it automatically comes out of your account. So you want to make sure that the bank, when you get that statement, does it reflect those deductions? If not, you're going to do that. So what if, the bank knew about those outstanding checks, or in this day and age, it seems more like ATM. A lot of people still use checks, but not like they used to. So the outstanding checks, we've got 3 of them here, as you can see here. So I'll just kind of copy them. Actually, I won't do that. I'll just go number 101, number 105, and number 111. And the amounts there, 200. Then we've got 25. And then we have 6778. So what we want to do is now add those 3 outstanding checks together. And we're going to subtract that total from the 2385.11. And what we end up with is actually the magic number that we want to see in the top half and in the bottom half. And this one right here is going to be called our adjusted bank statement balance. Basically, I just rewrote the title at the top and just stuck the word adjusted in front of it. But that's our magic number. That's what the bank should have had on the bank statement that we just got in the mail. Had they known about those deposits, had they known about those checks or ATM transactions that we had. So now we're hoping that we look in our checkbook that it says 2092.33, right? Well, I look in my checkbook and it says 2293.23. It's like, oh, it still doesn't match. So what could have happened? Well, the bank also takes stuff out of our paycheck, out of our, accounts, like a service charge, or maybe we bounced a check, or who knows, maybe we made a mistake when we wrote a check, and then when we went to enter it in our little check stub, we may have entered it incorrectly. Okay, so that's some of the negatives that can happen with a check, but with an ATM transaction, you use your ATM card, that number gets put in there properly, and the proper amount typically gets deducted from your account. So you don't see as much of this anymore, but companies have checking accounts. And because they have checking accounts, they have to do one of these bank reconciliations every period. Okay, so even if you don't use it personally, a company will use them. All right, so we're going to start off and we're going to analyze the checkbook section or the book section. So we'll call it the book balance. And according to the data, the book balance was 2293 and 23 cents. So it still doesn't match what's up top, but we're hoping that it will. So let's take a look at some of the things that we haven't used yet. I see that there is a check error, okay? And a check error, when you do a bank reconciliation, I would have to say this is the only wild card in the bank reconciliation process. It could be an add to the book balance section, or it could be a subtraction to the book balance section. It depends on the mistake that was made by the user. So as a rule of thumb, whatever you write the check for, that's gospel. That is the correct amount that should be deducted from your checking account. So when you look at this, it says check error number 102 was written for 1898. So 1898 is what should go in the checking account. 1898 should be deducted from the account. But what did this person do? Instead of subtracting 1898 from their own checking account, they subtracted 1988. So there's a difference there. There's a mistake. They deducted too much. So to fix the problem, we have to add back the difference. So add the check error difference, basically. Okay. So what we're going to do here, that 1988 minus the 1898, that was a 90-cent mistake that was made. It may not seem like that big of a deal, but it will cause you to not balance, right? Now let me just change that to an E. All right. So we added the check error difference. That's because, one more time, the check was written for 1898. They should have subtracted 1898. but accidentally they subtracted 1988. They subtracted too much. So to fix the problem, we have to add back that difference, okay? Which in this case is 90 cents. So let me update my math. So 2293.23, add another 90 cents to it, and now my subtotal is 2294 and 13 cents. Still does not match the 2293. This is the golden number that I'm shooting for. I'm hoping to get this one, right? Well, not really. That's what I started with. The golden number is really this one. So we want to get 2092.33 one more time, right? This 2293.23 is what we ultimately wanted because, you know, that's what we had in our checkbook. But as it turns out, different things have happened that we need to kind of fix our own books. So now, what else can we take into account? Well, NSF, do you guys know what an NSF check is? It stands for non-sufficient funds. That means that a check that one of our customers wrote us has bounced. So when we collected that money, we originally thought that the check was good, but as it turned out, it's not good. So what we have to do is we have to remove that from the books. So we're going to subtract the NSF check of $200. And let's put that. And then we have a bank service charge. These days, when a check bounces, it's typically like a $35 charge from the bank. So not sure if that's related to that or some, you know, miscellaneous reason, but that's another thing that we have to take out of our account. So we'll put that in there as well. So here are two things that without knowing, not having that bank statement in front of us, we may have missed these deductions. So we need to take them into account. And let's now subtract them from the subtotal that we had. And here comes a moment of truth. So when we do that subtraction, do we get that magic number? And we do. So notice that when we got done manipulating the top section, we ended up with 2,092 and 33 cents. And then when we worked the bottom section, we also got 2,092 and 33 cents. So we'll call this the adjusted book balance. So that's the bank reconciliation. Now, typically in your accounting classes, you will most likely also have to do journal entries for this information. And the journal entries are always connected to the book stuff. Okay? So the stuff that occurred or that impacted our books. I can't do the books for the bank. I can only do our books. So what we have to do is we have to do a journal entry for the check error difference. So let me just highlight them in green. We have to do a journal entry for the NSF check, and we have to do a journal entry for the bank service charge. Okay, so I happen to have a general journal with me right here. So let's put in the date, August 3rd. And let's do a journal entry. So for the check error difference, because it's an add, we're going to be debiting cash. And in this case, the amount of cash is 90 cents. And because most businesses do business on account, we're going to use accounts payable as our counter account. So this would be our first journal entry, and that is dealing with the check error. If this check error had been a subtraction, then this journal entry would have been reversed. I would have debited accounts payable and credited cash. Okay? Every one of these journal entries that you're going to see will have cash in it because we're dealing with our checking account. And so you may remember learning adjusting entries back in a previous chapter, and adjusting entries never involved cash. Well, your bank reconciliation entries always involve cash. So expect to see cash in every one of these entries. Also on August 3rd, we got to do an entry for the Nsf check. So basically what's going to happen here is we're going to debit accounts receivable. And usually we have a customer name attached to that. Just stretch out my journal a little bit. And then we're going to be crediting cash. So a little background about this one, right? And we may have to kind of go back in time to truly understand why we're doing this entry the way we are. So if we go back and pretend we were there when the service was first performed. So when the company did a job for this customer, let's say it happened on, I don't know, July 5th, okay? And on July 5th, customer wrote us a check. So in accounting, a check is the same thing as cash. So let's say they wrote us a check for 200 bucks. And the reason why is because we did a job. So we would have credited service revenue at the time of performing the service. So this is the journal entry that would have been done back on July 5th. So again, we do a job, customer writes us a check for 200 bucks. We think the check is good. Turns out, a few weeks later, we find out the check has bounced. So the customer wrote us a bad check. So if the customer wrote us a bad check, I don't really have the cash that I thought I had. So that's why the cash has to be taken out of our accounts. And in the meantime, by the way, hello, McFly, this customer still owes us the money. So if they still owe us the money, we have to put them in accounts receivable. And now we're going to go after that customer. And hopefully not only will they give us the 200 that they owe us, but whatever service charges we incurred. Okay, and then finally, the last entry is for the bank service charge. So companies will either debit bank service charge expense or they might debit miscellaneous expense. I'll just go with bank service charge expense. And credit cash. And that would be for the $1.80 in this case, a pretty cheap, probably unrealistic service charge amount. But, you know, this is just for example purposes only. Okay, so hopefully this gave you a good idea of how to do a bank reconciliation and the journal entries that are associated with it. All right, so I wish you guys the best. Good luck in your classes, whether it's Accounting 1 or Accounting 2, and hopefully I can help you with some other subjects. If there are other topics you want me to cover, just let me know. Just like this one, somebody asked if I could do one on bank rec, and here it is. And don't forget to subscribe and leave me a comment if you like. All right, you guys, take it easy, and we'll see you in the next video.